Have you ever noticed how two real estate investors can start at the same time with similar income, drive, and goals, but a few years later, one has successfully built up a portfolio of properties while the other is still struggling to get going? Oftentimes, the difference isn't luck. It's that one of them had access to more guidance, a mentor, a peer group, or a coach, someone who helped them shave off years off the learning curve, avoid costly mistakes, and stay focused when things got tough. So what does a coach or mentor really bring? They bring a lot of things: accountability, clarity, strategy. But in this video, I want to focus on something I believe is essential but often overlooked: experience. When you have decades of experience, you gain a different level of perspective. It's like choosing a surgeon. If you're about to have an operation, would you want the one who's done a handful of procedures or the one who's seen every complication and knows how to handle it? It's the same in real estate coaching. There are a lot of people offering programs after just a few years of investing. Maybe they've had a lot of success in a short period of time, but it was during a hot market and they haven't invested through a full market cycle. They haven't seen what happens when conditions change, when financing tightens, or when the easy wins disappear. That's not to say they don't have good ideas. It's just that experience brings something you can't fake: context, judgment, and perspective. But here's the challenge. Experience has to be earned. You build it through trial and error, through making mistakes and learning from them. The good news is, if you're new to investing, you don't necessarily have to spend years building all that experience yourself to be successful. You can learn from someone else's decades of experience, someone who's already made the mistakes, figured out what works, and is willing to share those lessons. Working with a great coach is like borrowing decades of experience without paying the full price in mistakes, missed deals, and wasted time. Hi, I'm Dr. Kenji Asakura. I'm a physician, entrepreneur, and real estate investor for over 25 years. Over the years, I've also coached more than 4,000 real estate investors, helping them build portfolios that align with their goals and risk tolerance. And in this video, I'm going to share 7 things to look for when choosing a real estate coach. How to tell whether someone's experience is real and battle-tested through the ups and downs, or just based on a few good years in a hot market. Because experience doesn't guarantee success, but it gives perspective. And that perspective is what helps you manage risk, think more clearly, and make smarter, steadier decisions. In the next part of the video, I'll break down what that kind of experience actually looks like and how it changes the way you think about risk, opportunity, and long-term investing. When you've lived through a full market cycle, you realize something important. Real estate isn't just about finding good deals. It's about understanding and managing risk. And risk isn't something to avoid. It's something to respect and think through carefully. Over the years, I've seen almost every kind of deal, and each one taught me something different about managing risk. Not in theory, but in reality. Take land deals, for example. They can have a place in your portfolio, but they come with higher risk. There's nothing inherently wrong with investing in land. You just have to understand those risks going in and be okay with the possibility that things might not turn out the way you planned. Let me give you a personal example. Back in 2003, I bought a piece of land expecting the value to triple within a few years. It didn't, in part because of the 2008 Great Recession. And here we are, more than 20 years later, that property still hasn't recovered to what I paid for it. The lesson wasn't that land is a bad investment. The lesson was that I hadn't fully thought through the risk. I didn't ask the right questions. How long could it take to recover? What if the market slows down? What if regulations change? Because sometimes you don't even need a crash for things to go wrong. A single zoning change, a new ordinance, or something like loss of water rights can completely reshape a property's value. That experience taught me something fundamental. It's not enough to spot risk. You have to understand it deeply enough to decide whether you're comfortable living with it. And I've seen this play out again and again. In 2008, a lot of investors didn't think they were taking big risks with adjustable rate mortgages until the rates reset. Overnight, cash flow disappeared and portfolios collapsed. The lesson wasn't avoid risk, it was think it through. Always have a plan for what happens if things don't go your way. That perspective shaped how my wife and I invest today. So when floating rate loans became popular again in 2021 and 2022, my experience from 2008 made me pause. We didn't avoid them out of fear, we just knew how fast the math could change if rates went up. And now we're seeing new trends like loan assumptions. It's not the same risk, but it follows the same pattern. It's another example of how easy it is to overlook the what ifs. What if interest rates stay high or go up? What if the property's performance doesn't improve as expected? If either of those things happen, some people could end up upside down when those loans mature. And that's what experience gives you. Not certainty, but perspective. It helps you slow down, ask better questions, and think through the what ifs before you commit your capital. And that's exactly the mindset you want in a coach. Someone who's been through the storms and can help you sidestep the same mistakes that cost others years of progress. But using a seasoned coach isn't enough on its own. Next, let's talk about how to choose the right coach and the specific questions to ask so you can tell whether their lessons come from living it or just learning about it. Earlier, I talked about how experience gives perspective and how that perspective helps you see and manage risk differently. And that's exactly what you want in a real estate coach. Someone whose experience helps you see what you might be missing. So how do you find that kind of coach? Let's break it down. First, ask yourself, how much experience do they actually have? And I don't mean years, I mean market cycles. Have they lived through both the ups and downs of multiple market cycles? The last major recession was in 2008, nearly 17 years ago. So for a coach to have gone through full cycle, they would have had to be investing back then. And to have seen what happens when the market turns, financing tightens, and you're forced to deal with challenges that test you in ways only a recession can. Because anyone can look good when the market's going up, but the real experience shows up when things get difficult. That's when you learn most about how someone thinks and how they manage risk. Second, look at the kind of experience they have. Do they invest in the same type of properties you're interested in? Have they owned both small and large assets? Have they actually sold properties, not just bought them? Selling is half the transaction, and going full cycle teaches lessons about markets, discipline, and timing that you can only learn through experience. Third, ask what they mean when they say they own real estate. Some people use the term loosely. They might own a small share of a syndication. There's nothing wrong with that, but it's very different from being the person responsible for every loan, every repair, and every tenant issue. Fourth, look at their experience actually using real estate to reduce taxes. A lot of high-income earners get into real estate because of the tax benefits. But has your coach personally done it? Have they qualified for real estate professional status or used the short-term rental tax strategy to offset their own active income? Teaching the concept is easy. Living it is what gives their advice real weight. Fifth, ask whether they've invested outside their local market. In other words, do they have experience with remote investing? Can they build and manage teams from a distance with property managers and partners they don't see every week? That kind of experience matters because great opportunities aren't always in your backyard. Successful investors know how to go where the numbers make sense, not just where it's convenient. Sixth, look at their values. Do they act in a way you'd be proud to model? Some coaches lead with lifestyle, the cars, the watches, the image. There's nothing wrong with success, but ask yourself, is that substance or show? When you work with a coach, you're not just learning strategy, you naturally take on some of their mindset, how they think, how they make decisions, and how they carry themselves as an investor. And finally, pay attention to their community. The people they attract say a lot about who they are. Are they surrounded by supportive, ethical, growth-minded investors who share ideas and lift each other up? Or is it more about quick wins and self-promotion? A great community feels safe. It's a space where you can ask honest questions, admit mistakes, and learn without judgment. When you choose a coach, you're not just choosing a person, you're choosing an environment that will influence how you think and grow as an investor. Next, let's talk about the real magic of experience, how it can transfer from your coach to you and help you skip years of trial and error. Here's the best part about experience. It's transferable. You don't have to live through every market crash or every mistake to benefit from those lessons. You can learn from someone who already has, someone who's willing to share what they've seen and what they've learned the hard way. And that's what a great coach does. They don't just tell you what to think, they help you learn how to think. They give you the context that helps you make your own decisions more confidently. A good coach doesn't remove risk, but they help you see it more clearly. They help you slow down, weigh your options, and plan for the what-ifs before they happen. And that's the real gift of working with someone who's been through full market cycles. They've seen what it looks like when things go wrong. And when things go right again, they understand that success isn't just about avoiding mistakes. It's about being ready for them and knowing how to respond. As our mentor once taught us, leaders anticipate, losers react. Someone with experience can help you anticipate, to see around corners, to plan for what's coming instead of just reacting when it arrives. That kind of perspective can't be learned from theory. It comes from experience, and it's something that can be shared, so you don't have to earn every lesson the hard way yourself. That's why choosing the right coach is one of the most valuable investments you can make. Not just for your portfolio, but for your growth as an investor. Next, let's talk about the kind of experience that's actually worth learning from and the one quality that often matters even more than success itself. When you're choosing a coach or mentor, look for someone who's earned their perspective, someone who's been through the ups and downs and is willing to be honest about both. Look for people who share the lessons as openly as their successes, the ones who are thoughtful about risk, transparent about what didn't go as planned, and genuinely invested in helping you grow. That's what builds trust. And that's what gives their advice depth. And that's what helps you make better, more informed decisions when it really counts. Experience doesn't guarantee success, but it changes how you see the world. And when you learn from someone who's lived through the full picture, the highs, the lows, and everything in between, their perspective becomes one of the most powerful tools you can have. You don't have to experience every challenge firsthand to grow as an investor. You can compress decades into days by learning from someone who's already walked that road and is willing to share what they've learned. If this perspective resonated with you, I'd love to hear your thoughts. Please drop a comment below and share what stood out to you most. And if you found this helpful, be sure to subscribe so you don't miss the next one. We'll keep diving deeper into what real experience teaches so you can invest smarter, manage risk more effectively, and build something that lasts. I'm Dr. Kenji Asakura. Thanks for watching. I'll see you in the next video.